Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of May the 6th, 2019. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. We're also going to review our major commodity futures, but more specifically the S&P 500, oil and gold, and of course our major Forex pairs. Now, when we look at the dollar index, we can see that the dollar index is hung up here on major support as identified by the VantagePoint software. 97.19, we're basically closing right on that level. We can assess here that we've tested that level multiple times. We were able to breach that level but not close below that level after that. Once again, very contradictory Federal Reserve. So when we look at this, the market immediately recovered in a very mixed statement on the Fed. Then, of course, surprisingly, the dollar sold off on Friday on a very positive U.S. jobs number. Now, the current administration doing a fantastic job with the U.S. economy. Again, in my respectful opinion, we've got 3.6 on the jobs number. Our U6 number is stable at 7.3 million. Everything looks good there. So at the current time, the signal is quite mixed here. Now, again, the market is still looking for a dovish Fed, which I don't think they really got. And they're looking for a softer unemployment report to tame inflation, and we didn't really get that either. So once again, the dollar could rebound here. But what we want to make sure is that we're identifying these verified support levels. Right now, that's coming in at 97.47. But the area that I've also got my eye on is down at the 96.36 area. As long as we're holding above this area, the dollar should hold its ground. Now, we also have verified resistance. That area is coming in at 98.08. The broader trend here, though, is still in a little bit of trouble here. As we look back over the last 2 or 3 years, as I usually do in most outlooks, you can see we have this additional resistance up here. So the dollar still absolutely has some work ahead of it. But for now, if we were to base our decisions strictly on fundamentals, the dollar is still quite stable. Now, this shows itself, in my respectful opinion, again only, that it shows itself via gold contracts. Gold contracts are unable to breach through this critical vantage point level at 1285. Holding firm, we still have very good support on gold on the downside. That's coming in at 1267, and additional support down to the 1239 area. But once again, this is pointing to some degree towards dollar strength, not dollar weakness. If the dollar is really as weak as what they're trying to tell us, then gold would have pushed higher. And you can see it's had basically 1, 2, 3, 4, 5, 6 attempts to break through this critical vantage point level, and it has failed at that level every single time. Now, our RSI is recovering, our neural index is still pointing up, but we must break and close above 1285 at least 2 days in a row if the dollar is really going to weaken here. Now, the same thing I'm seeing right now in oil contracts. Oil following gold lower. Once again, this is pointing us towards US dollar strength, not US dollar weakness. So I think the dollar still has a little bit more strength left before it sells off towards the middle of the month. So right now, these direct intermarket correlations guide us along that path to tell us how strong or weak the dollar is. And of course, that directly affects us on our main Forex pairs. Now, after that very choppy Fed on Wednesday, of course, the equities were pounded lower, but we still have very significant resistance up here at the all-time highs at 29.60. We know that every time the market has put in an all-time high, there's been a very significant sell-off shortly thereafter. Right now, at least for now, there are not any real signs in the VantagePoint software that that's happening. We've had a corrective move down to this 29.13 area 2-3 days in a row. You can see how it's using the T-cross long at 29.17 as a longer term pivot area. But again, we must break free and clear of this 29.60 area if the equities have any chance of a longer term rally. Now, once again, with the dollar index being a leading indicator, it also tells us with Euro US that the euro is still structurally very weak. We've had a big spike higher after, again, that very confused Fed is the terminology I'll use on inflation. We had the big spike higher only for it to reverse lower. Another classic example of buy the rumors, sell the fact. We slipped back under the T-cross long. That area is now pivoting off there. We've come up to this critical level at 12, 12, 12, but we must break through this area. We can see we've had an excellent signal here from the medium term crossing the long term predicted difference off this verified support. But this is right now telling us it's been a corrective move higher as we're failing at that critical vantage point level. Now, when we look at our long predicted, we managed to close above this area. So 111.90 is an area to watch, but we must break through the 12, 12, 12 area in order for this thing to move. Right now, we're not showing a lot of momentum in the RSI. It's slightly bullish, but again, we must break through that critical level as identified by the VantagePoint software. Now, when we look at US Swiss franc going into next week, we had a big push lower again off that, again, very confused Federal Reserve. Hit our long, T-cross long to the number at 101.36, and it's taken a significant bounce off that area. Now, our critical level for this week, we want to look to hold above 101.44 here, guys. We're looking for our indicators to turn back to the upside, our predicted differences on our neural index. Right now, it's suggesting we have a little bit more downside. I would look for longs on this particular pair, probably more towards midday Tuesday, providing we hold above this critical vantage point T-cross long pivot at 101.44. Now, as we move in towards our British pound US dollar, very, very big move up here in the pound dollar. We caught this in live trading in the VantagePoint live training room that I run on Monday and Wednesdays. Fantastic move off here. But once again, guys, the main trigger here was the medium term crossing the long term predicted difference with a rising RSI, and we've got that matched with the neural index. This off a verified support level, that coming in down at about the 128.66. We were buying around 129. That led to about a 200 pip move to the upside. Very nice move. But now we're coming into very strong staggered resistance. The first one I would be very mindful of this week is 131.95. This is going to be followed by 132.68. And again, our major level is going to be 133.78, but it's going to take some pretty fantastic news out of the UK on Brexit to get it going up that high. If anything, after this big move up on Friday, I suspect that we're likely going to get all tangled up between 132.60 and 131.94. So shorts carry a slight edge, but we're going to wait until we get a signal from VantagePoint, our RSI turning down, our predicted differences turning down. That hasn't happened yet, but when we look at our long predicted here, our main intraday pivot at 130.52, I do suspect at some point over the next 24 to 48 hours after the market opens on Sunday night that we will retest, at a very minimum, retest this level. Now, with dollar yen going into next week, again, the power in the VantagePoint software is to provide us with direct intermarket correlations and, of course, intraday pivot areas, whether you're a short, medium, or long-term trader. So if we look at this right now, we're getting all tangled up in the dollar yen at 111.65. We've repeatedly bounced into this VantagePoint pivot area and failed. However, we have very, very strong support down to the 110.84 area. And essentially, if we look at our direct intermarket correlations, for example, stronger equities, weaker gold, this does not benefit the yen. So we could see a very good long trade opportunity. We're already getting an early warning sign from the medium term crossing the long term predicted difference, but we've got to get some momentum building here. But again, as long as we're holding above 110.84, the bias, believe it or not, still maintains to the upside. Once again, when we look at our long predicted here, this is one of the classic strategies that I teach in the VantagePoint live training room and to my own direct clients. We can see the market in constant contact with the predicted moving average, selling into that area on a daily basis. Very, very profitable, guys. But if we can break above 111.57, that will immediately take us back to the 112.37. So that's what we're looking for here. But first and foremost, we have to hold the 110.84 area. Now, as we move into our three main commodity currencies, starting with, of course, US Canada, this pair obviously driving traders crazy. We're in a very identifiable range, guys. Don't lose sight of that. Okay, the top side of that is just above 134. There are immediate range support is coming in at 133.76. With oil prices falling, the probability is we're going to go higher. And if we look at our oil contracts again, we've got a sell signal on oil. If oil continues to move lower, that will push US Canada higher, the direct intermarket correlation. So once again, watch our support levels. We're going to be looking at our neural index is still pointing down, but if the area between 133.76 and this additional area at 132.74, this would right now, in my respectful opinion, be the buy zone. As long as gold is going lower and oil is going lower, guys, US Canada is going higher. The same could be said here for Aussie US and New Zealand US. Aussie US is likely going to come under more selling pressure this week. The fundamental event risk, we've got the RBA, I forget which day it is, I think it's Tuesday night. So I don't see any kind of hawkish rhetoric coming out of the Royal Bank of Australia. I'm not seeing that at all. So the likelihood is we retrace a little bit towards the 70.43, 70.70 area, and then we fail at that level. Classic case again of buy the rumor, sell the fact. They buy the Aussie going into the announcement, and then they dump out of it the second they get the news. So be careful of this one, but there's been a very good corrective buy signal this past week on this, but we just couldn't clear the VantagePoint medium or long predicted. You can see that we've got a verified zone has now shown itself inside of the VantagePoint predicted moving averages. That level now coming in at 70.68. So we would have to break free and clear to take the pressure off the downside, and I'm not seeing anything on the horizon that's going to do that. Now, when we come to New Zealand for next week, it looks pretty much mirrors Aussie US here, guys. That key pivot area, 66.80. New Zealand is the stronger of the two. What I've recommended with my own direct clients on this particular is instead of trading Aussie US and New Zealand US, we can always look to Aussie New Zealand, short Aussie New Zealand. There may be a very good play there, so we'll be looking at that one also. But right now, the three main commodity currencies, the CAD, the New Zealand, and the Aussie, are likely going to come under pressure if the commodities like oil and gold keep moving lower. So will these currencies. So with that said, this is the Forex Weekly Outlook for the week of May the 6th, 2019.